Why are traditional investment strategies losing ground with the next generation? Because millennials and Gen Z aren't just investing for profit. They're investing for impact, purpose, and flexibility. In this video, we explore how the two youngest generations in the workforce are transforming the world of investing. Their habits, tools, and philosophies are setting a new standard, and financial institutions are scrambling to catch up. Let's start with the mindset. Millennials born between 1981 and 1996 grew up during the rise of the internet, experienced the 2008 financial crisis, and entered adulthood with student debt and housing market volatility. Gen Z, born from 1997 onward, came of age during a global pandemic, climate crisis, and a digital revolution. These shared events shaped their risk tolerance, priorities, and approach to money. Unlike previous generations, millennials and Gen Z value transparency, ethics, and social responsibility when choosing where to put their money. They're not just asking, how much will I make? They're asking, what does this company stand for? That's why ESG investing, environmental, social, and governance-focused strategies, is booming. A growing number of young investors prefer to back companies that align with their values, such as sustainability, diversity, and fair labor practices. They're willing to accept lower short-term returns in exchange for long-term impact. Next up, technology. Both millennials and Gen Z are digital-first investors. They rely heavily on apps like Robinhood, Acorns, and Public to manage their portfolios. These platforms offer low fees, sleek interfaces, and educational tools, making investing more accessible than ever. Social media also plays a huge role, with TikTok, Reddit, and YouTube often serving as informal investment education hubs. However, this comes with both upside and risk. On one hand, it democratizes information. On the other, it can fuel hype-driven decisions and misinformation. That's why many young investors are turning to robo-advisors, AI-driven tools that automate investment strategies based on user goals and risk levels. They combine the best of both worlds, tech convenience and professional-grade algorithms. Another key difference? A preference for alternative assets. Millennials and Gen Z are far more open to investing in crypto, NFTs, fractional real estate, and even collectibles like sneakers and digital art. They're drawn to assets that feel relevant, digital, and sometimes even culturally significant. Traditional stocks and bonds still matter, but they're no longer the only game in town. Finally, let's talk community. Young investors love to collaborate, discuss, and crowdsource insights. Whether it's joining a subreddit like Wall Street Bets or pooling resources in investment clubs, Gen Z and millennials are building financial communities that challenge the image of investing as a solitary or elite activity. So are millennials and Gen Z better investors? Not necessarily, but they are more values-driven, tech-savvy, and globally aware. Their influence is pushing the financial world toward greater innovation, inclusivity, and accountability. Are you part of this new wave of investors, or are you still adapting to the changes? Let us know in the comments. And if you enjoyed this breakdown of next-gen investing, don't forget to like, subscribe, and turn on notifications for more videos on finance, technology, and the future of money.